Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are several things to pay attention to for the upcoming trading week. Now, last week, earnings was the big driver. We had Google, we had Microsoft, we had Facebook or Meta, all of which crushing the NASDAQ. We saw some pretty significant slides there, making for some great shorting opportunities. And then on Thursday night's earnings for Amazon kind of saved our Friday market. But all in all, some major market cap companies. So why don't we start there and look at our earnings calendar? We've got over 1,000 earnings this week alone. Matter of fact, it's 1,358 companies will be reporting. On Monday, we kick things off with McDonald's, Arista Networks, and ON Semiconductors, as well as Simon Property Group, so a good mix of sectors there. On Tuesday, we move over to some drug makers. You've got Pfizer, Amgen, Caterpillar, BP, Anheuser-Busch, and ETN. That's Eaton. On Wednesday, you have Novo Nordisk, Qualcomm, CVS, Model N, Airbnb, PayPal, and Estee Lauder companies. So again, we've got some nice mix of sectors. On Thursday, the big daddy, Apple, most influential security in the market because its market capitalization is just so dang big. You also have Eli Lilly, ConocoPhillips, Starbucks, and Regeneron Pharmaceuticals. And wrapping up the week, we have the big daddy over there with Mr. Berkshire Hathaway reporting earnings. We also have Enbridge and Dominion Energy. So as you can see here, we have quite a few companies reporting earnings. Of course, any one of those can be major market movers, but I do believe all eyes will be on Apple. Thursday night after market close, that will be the wildest, crazy, most volatile announcement of the week. As we've seen, a lot of these big tech companies not reporting the greatest numbers, and seems to be a dark cloud looming over Apple right now, particularly when you look at the price chart. But wait and see what happens with their earnings Thursday night and how that treats our market on Friday. Now, let's look at housing, one of the major sectors we always focus on because it's such a driver of economic growth. We have three big announcements happening on the housing front, two on the same day. You're lucky we got a twofer. We start things off with the Case-Shiller Composite 20 Home Price Index on Tuesday at 9 a.m. Eastern Time. And at that exact same time, you get the HPI month-over-month numbers. Now, for those who may not know what this is, the S&P Case-Shiller Composite 20 Home Price Index, which is a mouthful, say that one 3 times fast, represents the price average of 20 major metropolitan areas. So as we track those 20 areas, our prices going up or down, it's a great measurement of kind of growth in the real estate sector. The HPI numbers are the increase or decrease in prices of Fannie Mae and Freddie Mac loans. So we get an idea of how those market segments are doing with Fannie Mae and Freddie Mac. And the final announcement for the week comes out just a little bit later. Construction spending on Wednesday. I know this may not seem that significant, but construction spending is huge. It represents growth, people spending money on building on homes, improvements, etc. So construction spending is a sign of economic expansion. Now, we move from there to the chart of the Case-Shiller Composite 20 Home Price Index, which is an interesting one. I bring this one up because so many people are permanently bullish on real estate. It only goes up. That's not true. As you've noticed over the past 5 months, you've actually seen price contraction, meaning prices have been declining. Now, the expectations aren't in yet, but as you can see, the previous number was 0.1, so we're seeing just this little itty-bitty slight increase in the price of Case-Shiller Composite 20 Home Price Index, which is a positive sign. Going all the way back into 2015 on this chart, we haven't been below zero. So this previous 4 months was a little bit concerning, but all in all, I think it will be okay. And really, all eyes are focused on this hard red edge here where we were below zero. Now, let's move on to another topic. We're going to talk about jobs data to be precise. Of course, we want to see job expansion, job growth. That's one of the directions of the Fed. They want to see full employment. Well, what steps are being done and is it working? So let's take a look at our jobs data here to see how the numbers are panning out for the unemployment data for the week. And there are several announcements. You have ADP non-farm employment change on Wednesday at 8:15 a.m. That is a major announcement there. A lot of people like to focus on that ADP non-farm employment change to give them a sense as to where the jobs are being created and really with what intensity are those jobs being created. Our next announcement happens on Wednesday as well, which is shortly after that at 10 a.m. Eastern Time. And you can see here, that's the JOLTS job openings. Now, that's not the biggest, most significant one, but it is just another piece of jobs data for the week. We got the big ones coming up a little bit later on. Moving on, we've got unemployment claims on Thursday, which happens every week. That's at 8:30 a.m. All of these times, by the way, are Eastern Time. And finally, on Friday, the unemployment rate. Dun, 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 dun. That's Friday at 8:30 a.m. Eastern Time. And right now, the expectation for that unemployment rate is we're going to stay right where it is currently at 3.8%. So all in all, a fairly decent sign. Let's hope we can stay below that 4% mark. Of course, I've been saying many times that years ago, Ben Bernanke was saying, and Janet Yellen, that 5.5% is full employment. So we are well below full employment, which is a great sign for economic growth, as having unemployment that low means that people are hiring and there's plenty of jobs out there. All right, our final piece here deals with, well, a piece we've talked about quite a bit, which is interest rates. Now, of course, all eyes will be on the U.S. this week, but there are multiple markets making announcements. So let's start things off over in Japan. Now, this one is a tentative meeting on Monday. They've been at negative 0.1% for what seems like forever, and there is no real decision on if they're going to change. I do believe that in the near future, you're going to start to see them raise that number, at least get into positive territory as the rest of the world is aggressively raising rates. Let's see what Japan does. But most likely they will stay the same. It's more about what the comments are afterwards about potential future increases in this rate. Next on our list is the Big Daddy, the one that everybody in the world is watching. That's the U.S. Federal Reserve, the FOMC meeting. That announcement will happen Wednesday at 2 p.m. Eastern Time, so be very careful when that announcement comes out. The expectations are, I believe, about a 90% probability that we're going to come out at 5.5% and stay right where we're at. So another pause by Jerome Powell and the FOMC members. But again, the press conference after that is really where all the fireworks happen and the comments, they get grilled by all the press and media. That could be where the real secrets get told on those numbers. And finally, we wrap things up with the Bank of England. Across the pond, they're also expected to stay exactly where they're at 5.25%. That will happen Thursday at 8 a.m. Eastern Time. So for any of you out there that are trading the British pound, you might want to keep your eye on the British pound, the Japanese yen, and the U.S. dollar. We've seen that U.S. dollar on a pretty significant trajectory, as well as yields have been surging. We'll see what happens with that Fed announcement for the U.S. markets on Wednesday, and if that changes the direction of those two pieces. That, my friends, is your Monday Morning Must-Knows. We will see you next week.